Donald Trump's net worth tripled this week. According to Bloomberg's Billionaire Index, Trump is worth around $6.5 billion today, up from $2.3 billion last week. So you're probably wondering, how did Trump make so much money so quickly? And the answer to that is this stock right here, Trump Media and Technology Group. Now there's a long saga associated with this stock, and I won't bore you with the details, but it essentially boils down to this. Right after his presidential term ended in early 2021, Trump started a company called Trump Media. A few months after that, that media company decided to list its stock publicly through something called a SPAC merger, which is an unusual way of going public, but it's something that a lot of small speculative companies were doing back in 2021. Trump Media had no products and no revenues, let alone any profits, but it had Trump, which was enough to send shares of the SPAC, or the shell company that Trump Media wanted to merge with, through the roof. Again, this was in 2021, the year of GameStop, AMC, and a whole bunch of other speculative manias, so to see a Trump-associated shell company take off wasn't that shocking. Anyway, several months after Trump Media announced that it's going public, it released its first product, Truth Social, a social media platform that claimed to be a censorship-free version of Twitter. So it's early 2022 and you have this new company called Trump Media that just launched its first product called Truth Social, and the stock of the shell company that Trump Media was going to merge with was rocketing higher. Everything was great for Trump and his new company. But that all changed pretty quickly. As 2022 went on, the stock market tanked, and the massive bubble that had formed in the speculative parts of the market burst spectacularly. The SPAC associated with Trump Media plummeted over 80% in just 6 months. Making matters worse, the deal to take Trump Media public through the SPAC merger was at risk of falling apart. Investigations by the Department of Justice and the SEC related to insider trading and fraud had thrown a wrench into the deal. There was a very real risk that the merger wouldn't happen and Trump Media would run out of money and go bankrupt. That, of course, didn't end up happening. To make a long story short, Trump Media and the shell company somehow managed to stay afloat over the next 2 years. They scrounged up some extra money and they eventually settled with the SEC, ending the main investigation that was holding up the merger. So this week, Trump Media finally went public and the stock exploded to the upside. That's how Donald Trump's net worth jumped so dramatically. He owns 58% of the company, which at today's stock price is worth $5.8 billion. To put that in perspective, that represents 90% of Trump's net worth, according to Bloomberg, way more than his real estate empire. Now, the crazy part about all this is, other than officially becoming a publicly traded company, nothing much has changed for Trump Media over the past 2 years. Truth Social hardly has any users, it generates no revenues, and the company is losing money. Yet the stock market is valuing Trump Media, whose only product is Truth Social, at almost $10 billion, which for context is around the same market cap as Campbell's Soup, a company that generates almost $1 billion of profits per year. But all that doesn't really matter. Speculative fervor is back in the stock market in a big way. We haven't reached 2021 levels of speculation, but there's still a lot of it in everything from AI related stocks to crypto and now Trump Media stock as well. Donald Trump has that speculation to thank for his windfall. Now you might be wondering, how long can this last? Can a company that makes no money be valued at such a high price indefinitely? And the answer to that is probably not. Over the long term, stocks tend to be priced based on their fundamentals, things like profits and dividends. GameStop, AMC, and other meme stocks that were big in 2021 are down significantly from their peak levels, and that's because their fundamentals can't justify those high stock prices. We'll probably see something similar happen to Trump Media. Unless Truth Social becomes the next big social media platform that everyone uses, or Trump Media comes up with some other highly profitable product or service, the stock will eventually trade at a much lower level. But that doesn't mean that Donald Trump won't benefit from the current craze in Trump Media stock. The man owns a lot of the stock, and if there's people clamoring to buy it, he's gonna sell it to them, and probably cash out with hundreds of millions if not billions of dollars. There is a 6-month lockup period, meaning that Trump isn't allowed to sell his stock for that amount of time. But that can easily be waived by the company, and I suspect it is gonna be waived to help Trump out. I think the bigger story here, though, isn't even about Trump. It's about this idea that meme stocks, or meme coins in in the case of crypto, are becoming a normal part of our financial markets. A lot of people thought that when the bubble burst in 2021, it was over, and we'd never see something like GameStop or Dogecoin again. But here we are almost 3 years later, and the same types of things are happening again. Dogecoin is back to a $25 billion valuation, and Trump Media, with no profits to speak of, is worth $10 billion. So I think we're starting to see meme assets become normalized. And that's something new. Sure, we've seen financial market bubbles all throughout history. A typical bubble is when investors bid asset prices to levels well beyond what they're worth based on fundamental factors. But it's because of those fundamentals that investors are so excited about those assets in the first place. The dot-com bubble and the housing bubble are great examples of this. People might have been overly exuberant about internet stocks and real estate back in the late 90s and early 2000s, but there were real reasons to be excited about those assets. In the case of meme stocks and meme coins, there aren't any traditional fundamental factors underpinning their value. The buyers of these assets know that, and yet they don't care. To them, it's a game or a form of gambling where people who buy in early get rich while latecomers end up with huge losses. So this might be something that's here to stay. When people in the markets are feeling good and they have money to risk, we might see more activity in meme assets. And when markets are going down and people aren't feeling so great, we might see less meme asset activity. I also imagine that every time we get one of these new speculative waves, we'll see a combination of new and old meme assets. Some assets, like the stock of AMC, will only be a meme asset for a very short period of time. AMC was a big winner in a big meme stock back in 2021, but this year it's not doing anything. That's probably what we're going to see for most meme assets. They'll have their moment in the sun and then they'll flame out and never be meme assets again. But a small number of meme assets might maintain their status for a long time. And if they do it for long enough, they might graduate to become something bigger with lasting value, like Bitcoin. If you think about it, Bitcoin is a lot like other meme assets. People buy it with the hope that they could sell it to someone else at a higher price later. It's valuable because it represents a powerful idea, that you can own a digital currency with a fixed supply that can't be controlled by any one entity. This idea, or this meme, is what's enabled Bitcoin to stand the test of time and bounce back every time it's been knocked down. We're seeing something similar happen to Dogecoin. Yeah, it has a much less serious meme associated with it than Bitcoin, and people are buying it for different reasons, but its value is proving to be just as durable. Anyway, this is getting kind of long, so I'm going to leave it there. Hope this was interesting. I'll catch you in the next video and follow for more investing insights.